All right, welcome everyone. We are here to talk a little bit about some of the top signals and even bottom signals that we typically look for here at Santiment that helps make sure that we're optimally trading and maximizing profits, right? There's a lot of difficulty sometimes in watching how other traders are performing and seeing you kind of lag behind. And this can happen whether it's a bull run and you're not profiting as much, or a bear run and you are hemorrhaging faster than everybody else, or even on a flat market when hodlers are doing okay and you're actually losing money because you're trying to hop from asset to asset, or you're taking profit too early, or uh, potentially purchasing a little bit too prematurely as well. So, lots of different ways in which traders can make mistakes. And obviously, trading is never going to be a perfect science. It's a game of probabilities, right? And that's what Santiment's all about, using fundamentals and analytics to make the most mathematically correct assumption about where markets are going to go, knowing that any crazy, news can hit the media and suddenly create chaos, and metrics can go out the window. But assuming news stays relatively stable and we know what we know now, uh, we can use these kinds of metrics to really benefit us. So let's jump right into it. I've picked a few different examples. There are certainly more, but these are maybe 5 to 6 different ways in which you can use Sentiment's metrics to stop losing money relative to the field and actually be one of the best performers, regardless of which direction markets are going. So, for starters, let's take a look at Maker here. This is just an example I pulled up, and this is a popular metric known as age consumed. What this looks at is the amount of coins being moved at any given time. If I highlight this, you'll see these candles in blue here are on 3-hour intervals. And typically, we look at the amount of coins being moved multiplied by the age in which those coins were sitting in wallets just prior to being moved. So if it's a really old, you know, maker token, or call it 1,000 maker tokens, if it's in a whale wallet, and those suddenly get moved, those have a much greater impact on how big this age consumed spike is, because that's what the math is. It's just amount of coins multiplied by the age in which the coins were at the time they got moved. So one big candle sticks out here, and that is precisely when this local top occurred. Now, it isn't going to happen on every top, but should you see prices rising and suddenly you see an age consumed candle like this pop up, it's a pretty likely scenario indicating that prices are about to retrace, which is, of course, exactly what happened with Maker over the following 2 weeks or so before it finally recovered for reasons other than what was going on with age consumed. Now, age consumed can also work as a bottom signal, but in my opinion, it's not quite as reliable as what we see as a top signal. Um, so, generally speaking, in market conditions, kind of like what we're seeing right now with the recording of this video on December 4th, 2023, when Bitcoin has just erupted above 42K for the first time in over a year and a half, these are the times when you're seeing prices all over the place rising, and age consumed spikes are firing off for many assets. And assuming you have a Sandbase Pro membership or a trial, I encourage you to check it out. Look at some of your favorite assets. Obviously, the ones you're investing in are the ones you're going to have the most interest in. But if you just explore some of the age consumed spikes over the past year, you'll see plenty of examples just like this. All right, moving on to another example, we have Cardano here, and we're looking at Binance's funding rate, along with the USDT pair in this case, which is where most, especially now that BUSD is slowly being phased out, you're going to want to look at the USDT pair when it comes to Binance funding rate. Typically speaking, this is a counter indicator. When there's a lot of shorts going on, like so, you'll see red bars like this indicating there are more people or more open positions that are betting against the price, meaning they're expecting it to go down compared to positions expecting it to go up. You can see, conversely, there are situations like this where there are more people betting for the price to go up, and they're doing what's known as longing. versus betting on prices to go down, which is shorting. So this is a ratio. It isn't just a sum of longs and ignoring shorts. This is the ratio of longs versus shorts. So when there's more longs, theoretically that's going to be more of a top signal, and more shorts, that's going to be more of a bottom signal. And these are great examples here. You can see on September 20th, huge funding rate, short ratio going on that essentially called the bottom. And you saw, it did have a leg up, came back down, a little more shorting right here, and then blast off. And then all of a sudden we see this one big long candle and prices drop. Now it's relevant. I'm looking at Cardano now, and I have nothing either good or bad to say about Cardano. This is just the metric or the asset that I picked. You're seeing a lot of longs opening up right now, and that means that there's a lot of expectation that the price is going to keep on growing. Cardano happens to be a very sentiment-driven asset compared to many. So this would be a bit of a caution flag. Who knows how this will age? I'm not going to call any tops or bottoms here on this call, but I'm going to tell you that probability-wise, this is going to be something that should worry you if you are longing, and these should be things that should be making you excited if you're longing, because that means that they're closer to a bottom. So I hope that helps. Next up, let's look at another very sentiment-driven asset. This is a meme coin that kind of popped up in the past year and a half into crypto's public consciousness, and this is weighted sentiment. And what we do here is we multiply the amount of discussions going on related to Pepe, and we multiply that by the ratio between positive sentiment comments and negative sentiment comments all over social media. When things are super long or super positive and euphoric, you'll see a lot of FOMO, and oftentimes you'll see corrections because whales are using these opportunities where there's a lot of small addresses trying to buy to sell off their coins at a premium price, according to them. When things start to get negative, you'll start to see prices go up. And this was, of course, the most negative we had been. There was a 3-day stretch here. These are 3-day candles that I've set up. And between November 27th and the 30th, we were at an incredibly negative territory for Pepe. And look what happened right at the tail end. Boom, we suddenly explode in price. That's not a coincidence. And this isn't just, the effect of all markets going up. Pepe went up significantly more and had a massive rise right after this negative sentiment bar. So another thing to focus on is, when can I buy into all of the bleeding? When people are doubting an asset, how can I kind of be a contrarian in that case and purchase, knowing that I'll be doing so while everyone else is selling at a loss and writing off the asset? And conversely, you can do the same when everyone's euphoric and you're wondering whether to sell off the asset that you've been holding on to for a while. These are the times to do it when you see these big signals. Now, there are exceptions. This was the most positive spike in the last 3 months, and prices actually kept going up, albeit there were a few more positive stretches here, and then all of a sudden it dropped off. But more often than not, positive sentiment means a top is forming. Extreme bottom sentiment means or extreme negative sentiment means a bottom is forming. Moving on. Next example I have is Chainlink, and I chose Chainlink because it has correlated quite well with MVRV. In this case, we're looking at 30-day MVRV, which is the overall average trading returns of any active addresses over the past 30 days at the time these spikes happen. So right now, this is the past 30 days, roughly November 3rd to December 3rd. If we went back here, this would be October 7th to November 7th, and any active traders, what their average returns were. So long story short, this is another contrarian metric where you want to look at the high signals as a more likely chance of a sell opportunity forming, and these bottom ones or negative as good opportunities to cash in on a potential bottom. Now you can see the more extreme they are, the more likely it is to convert to some sort of bottom signal or a top signal. But really, looking at these, anything below about negative 15%, which is roughly right there. Anything below that, look at these three: 1, 2, 3. In each of them, there was an inevitable rise. This one, a little bit, I don't love it as much as a good example, but these were perfect times to jump into Chainlink based on the average 30-day trading returns going below negative 15%. Bounce right at the bottom, bounce right at the bottom, and then look at the other end of the spectrum. If we look at plus 15%, right about there, anytime we're above, like here, perfect top signal. This told us it was time for a cool down period. I mean, this was perfect. If you're following the extremes here in July and August, July 19th, average trading returns get to 24.4%, immediate correction. Then all of a sudden, average trading returns get to negative 17%, sort of a casual, it flattens out and then eventually rises up. But still, if you bought in here, you would have done just fine, even if the price slipped another 2, 3, 4%. And then look at these. I mean, this was kind of a fake out, right? Because we had a huge extreme, and it didn't really stop Chainlink's price from exploding. I know part of this was that the overall markets were all just surging in late October, so it almost didn't matter. But eventually the MVRV got super high to like 37, 38%, and the top formed. And now we're kind of close to neutral, but still a little bit on the positive side, meaning there's some increased risk going on there. So that's another way you can avoid losing money is if you are holding on to an asset that has gained a lot, you have precise times where you can take profit. And on top of that, if you are a Sandbase Pro member or you have a trial open, you can use our Sandsheets model, which will show you how close they are to being overbought or underbought. And right now, at the time of this recording, there's still a lot of semi-overbought and overbought signals going on, displayed here in orange and red. Now there's another one here. This is on our social trends dashboard. You can look at the trending tokens, which you can see is brand new. It was just released a couple months ago, and we're refining it more and more every day. Basically, the way this works is when you see an asset that is surging in price and it's on this top 10 list, check to see just how high it is on this trending list, because we did a back test and found that over 72% of assets that are climbing like this and are in the top 3, which right now we see Bitcoin, Beam, and Luna Classic in the top 3. All 3 have been climbing like crazy. 72% of the time, shorting the asset when it's in this position is profitable. So 28% of the time, it's going to keep climbing. 72% of the time, the asset is going to drop. Bitcoin's a bit of an exception. I mean, it could work to an extent, but considering it's the largest asset in crypto with such a massive market cap, it is much less sentiment driven compared to assets like Beam and Luna Classic. So I wanted to throw in that asterisk. Ethereum, of course, also would be in that category as the second largest market cap. But overall, look for opportunities like this if you're interested in shorting, or at least don't want to lose money if you've been holding on to Luna Classic. The metrics show that the probability of a correction coming soon or profits slowing down at this point is quite high. And in case you want to read more about it, we had a great article written by one of our staff members all about this study. You can see Numeraire in this example highlighted as an opportunity to essentially short or take profit. And it goes into the mathematics and the details, and it's a fun read with a lot of humor and math and useful information. So I definitely recommend you check that one out. I'll have more on top and bottom signals and how to avoid losing money and how to maximize winning money in future videos. But if you've liked this one, feel free to give it a thumbs up. Super important and helpful for us to continue spreading the word about these kinds of metrics to the crypto community. And in the meantime, I hope you all have an excellent day wherever you are in the world.